Hi, and I'd like to say that this webinar is sponsored by Forex4you. My name is Yury Safronau. I'm an 𝘺𝘯𝘧𝘪𝘐𝑚 Chief Currency Strategist and the person behind the daily free Forex signals on 𝘺𝘯𝘧𝘪𝘐𝑚. I have a PhD degree in finance and I work as an independent equity manager. I have extensive experience in trading stocks, crypto, and Forex since 2009. And let me tell you that this webinar is sponsored by a great broker with the name of Forex4you, and I'd like to briefly introduce you the company. All right. Forex4you was created in 2007 to make trading more accessible to traders around the world. Since then, the company has grown significantly. Over 2.7 million trading accounts with more than 1.3 billion orders executed, winning awards like Best Forex Broker 2023 from the International Investor magazine. Forex4you offers over 150 instruments, including Forex, stocks, commodities, and indexes. Deposits and withdrawals are available via a plethora of e-payment systems, and there are multilingual customer service available 24/7 to answer any query. Forex4you also boasts an active and growing partnership program. They are flexible programs with fair commission structures, reward and cater to their affiliates and introducing brokers. Thus far, over 52 partners, 52,000 partners have received commission payouts totaling more than 148 million. This program also ensures that there is dedicated support from personal account managers who have the expertise to help grow their partners' businesses. On top of this, partners can earn more through bonuses from the new loyalty program. The program also offers effective marketing materials and transparent commission statistics. Even though with no trading experience can be a Forex4you partner, just join them and promote 𝘺𝑗ℎ𝑟4you leaders to get up to $8 per copied lot. 𝘺𝑗ℎ𝑟4you is a copy trading service which was launched in 2013. It allows new traders to replicate successful trades, and experienced traders can also benefit by sharing their trades to earn more. There are several other promotions which you can get from Forex4you. One of those is their prize offerings. You can start trading today and earn up to $5,000 worth of prizes. Applying to this promotion is very simple. You need to sign up if you're a new client and fund your trading account and trade with number of lots in accordance with the price tier. Just as simple as that. And another promotion is their bonus offerings. This bonus program gives you the opportunity to earn more with your capital. That means when you deposit into your trading account, they will double it. So they have from 5% to 100% bonuses, up to 5 bonuses at a time, and unlimited bonus amounts. All right. I've introduced you Forex4you at a time. Then we're gonna be jumping to how to open an account in a minute. I believe it would be after educational part or after their live market analysis part. But before we start the educational part of the webinar, let me briefly mention you the disclaimer. Any opinions made may be personal to the author and may not reflect the opinions of Forex4you. All expressions of opinions are subject to change without notice. This material is considered a marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer or solicitation for any transactions in financial instruments. Forex4you makes no representation and assumes no liability as to the accuracy or completeness of the information provided, nor any loss arising from any investment based on a recommendation, forecast, or any information supplied by an employee of Forex4you, a third party, or otherwise. All right, that was it for the disclaimer. Today we'll be analyzing different Forex pairs, gold, and indexes. But before we jump to charts, let me briefly introduce you several technical analysis tools which I use. The educational part of the webinar would take around 15 to 20 minutes. Basically, I've included that because I want you to know how do I analyze market. So which instruments I use and which methodology I'm using to provide my trading signals. Not just I tell you buy or sell, but I tell you why should you buy or sell any particular instrument. So I hope this educational part would be valuable for you. And after these 15-20 minutes of education, we'll be jumping to live market analysis and live charts. All right? Okay. So first of all, I'd like to tell you that we are going to analyze market with the help of support and resistance lines and moving averages. So let me briefly describe you what support and resistance lines and moving averages are and how we're going to be using those. Okay. The first slide says support and resistance basics. Now, the concepts of support and resistance are undoubtedly two of the highly discussed attributes of technical analysis. Part of analyzing chart patterns, these terms are used by traders to refer to price levels on charts that tend to act as barriers, preventing the price of an asset from getting pushed in a certain direction. Support is a price level where a downtrend can be expected to pause due to concentration of demand. As the price of currency pair drops, demand increases, thus forming the support line. Resistance zones arise due to a sell-off when prices increase. Once the area of support or resistance has been identified, it provides valuable potential trade entry or exit points. This is because as a price reaches a point of support or resistance, it will do one of two things: bounce back away from the support or resistance, or violate the price level and continue in its direction until it hits the next support or resistance level. Most forms of trades are based on the belief that support and resistance zones will not be broken. Whether the price is halted by the support or resistance level or breaks through, traders can forecast on the direction and can quickly determine if they are correct. If price moves in the wrong direction, the position can be closed at a small loss. If price moves in the right direction, however, the move can be substantial. So how to find those support resistance levels? Key support and resistance levels are simply zones where the prices of the chart have found it difficult to fall below or above, and then rejected any attempts to break on those levels. Because of these reactions, they refer to key areas of the chart where institutional traders are likely to buy or sell instruments, take profit, or place their stop around. So support and resistance levels can be formed in four ways. Those are psychological, pivot, price action, and moving averages. Let me briefly tell you about each of them. So psychological support and resistance occurs as a result of traders using price levels that end in round figures, such as 0, 1.15, 1.20, 110, etc., as areas where they set their price targets. Most inexperienced traders tend to buy or sell assets when the price is at the whole number, because they are more likely to feel that a currency pair is fairly valued at such levels. Most target price stop orders set by either retail investors or large investment banks are placed at round levels rather than at prices such as 1.2015. Because so many orders are placed at the same time, these round numbers tend to act as strong price barriers. If all the clients of an investment bank put in sell orders at a suggested targets of, for example, 1.21, it would take an extreme number of purchases to absorb these sales, and therefore a level of resistance would be created. So how to identify this psychological support resistance? Basically, it's very, very simple. The trader looks for areas where the price of the asset ends in round figures and then checks to see if this area has been respected as a support and resistance in the past. Like on the screenshot which you see, we see an area of 1.20. We see that it acted as a support in here, and it continued to act in the support in the second time. So the next slide is called pivot point support and resistance. Pivot point support and resistance are calculated based on the application of pivot points, which have been used by floor traders and professionals for decades. Pivot points are calculated from the previous day's high, low, and closing prices. Using pivot points, there are 3 levels of support: support 1, support 2, and support 3, and a central pivot point, and also 3 lines of resistance: resistance 1, 2, and 3. On this slide, you can clearly see how price action reacted to the support 3, support 2, and support 1. Finding a double bottom at support 3 and resistance at support 1. So, however, the price action of the instrument will ultimately determine how each of these lines react, as it's possible for a support to act as resistance when broken, or for resistance to act as a support when breached. So how to identify these pivot points? Rather than go through the complex pathway of trying to calculate pivot points using the previous day high, low, and closing prices, a trader can use any of the pivot points indicator, which will automatically draw pivot points on the chart. So basically, I believe that there are pivot points available indicators for MetaTrader 2. And if you need one, you can easily go to a2zmarkets.com and download it. All right. So price action, support, and resistance. Price action can also determine where support and resistance occur. If a particular price level has functioned as a support or resistance level in the recent past, it's likely that traders will respect those levels when prices approach them, as the sentiment at the time may indicate a recent support as an oversold area or recent resistance as an overbought area. On this slide, you can see areas that price action formed support and resistance levels. We can also see that the region that used to be resistance area eventually became a support area when it was broken. Incidentally, this was also almost a psychological area of 1300, where the price of an asset formed a round figure. Since support and resistance levels define areas where buyers and sellers for an asset enter and exit trade positions, they are important when determining entry and exit point based on support and resistance trade strategies. So how to identify those levels? Another quick way to identify support and resistance levels is to scan the charts to see areas where prices has formed recent support and resistance. If a bullish run terminates at a price levels and retreats before assuming another bullish run, terminates at the same price, then this is a resistance level. As long as the level holds, it serves as a resistance, and once it's broken, it becomes a support. Okay, so next slide is called finding entries at support and resistance. The basic trading method for using support and resistance is to buy near support in uptrends, ranges, or chart patterns, and to sell short near resistance in downtrends, ranges, and chart patterns. It helps to isolate a longer-term trend, even when trading a range or chart pattern. And the trend provides guidance on the direction to trade in. For example, if the trend is down, but then a range develops, preference should be given to short selling at range resistance instead of buying at range support. The downtrend lets us know that going short has a better probability of producing a profit than buying. If the trend is up and then a triangle pattern develops, favor buying near support of the triangle pattern. Buying near support or selling near resistance can pay off, but there is no assurance that the support or resistance will hold. Therefore, consider waiting for some confirmation that market is still respecting an area. In the slide which you see, I used a stochastic indicator as a confirmation. So if you see that the price reaches the resistance in here, and also the stochastic indicator jumps above the 80 level, that's kind of a confirmation which you need in order to enter a position. So if buying near support, now wait for consolidation in the area and then buy. When price breaks above the high of that small consolidation area. When the price makes a move like that, it lets you know the price is still respecting the support area, and also that the price is starting to move higher of a support. The same concept applies for selling at resistance. Wait for a consolidation near resistance area, then enter a short trade when the price drops below the low of the small consolidation. When buying, place a stop loss several cents below support, and when shooting, place a stop loss several pips above the resistance. If waiting for a consolidation, place a stop loss a couple of pips below the consolidation when buying. When selling them, place stop loss a couple of pips above the consolidation. When entering trade, have target price in mind for a profitable exit. If buying near support, consider exiting just before the price reaches the strong resistance level. If shooting at resistance, exit just before the price reaches strong support. You can also exit at minor support and resistance levels. For example, if buying at support in a rising trend channel, consider selling at the top of the channel. In some cases, you may be able to extract more profit if you let a breakout occur instead of selling at minor support resistance. For example, if buying near triangle support within a larger uptrend, you may wish to hold the trade until it breaks through triangle resistance and continue with an uptrend. All right. So, there is another approach as well. Some traders prefer to buy when prices come close to support level, enter directly at the level or close to it. They use very tight stop loss, several cents below support, and take profit level, which is 5 to 10 times larger than stop loss. In this case, even if your position is closed by stop loss, you don't have to lose a lot. But in case of a retracement, you can catch all movement from the beginning. This is also a concept that old support can become a new resistance or vice versa. This isn't always the case, but it does tend to work well in very specific conditions. So right now, let's jump to the moving averages. Most technical traders incorporate the power of various technical indicators, such as moving averages, to aid in predicting future short-term momentum. But these traders never fully realize the ability that those tools have for identifying levels of support and resistance. As you can see from the chart below, a moving average is a constantly changing line that smooths out past price data while also allowing the trader to identify support and resistance. Notice how the price of an asset finds support at the moving averages when the trend is up. The traders use moving averages in a variety of ways, such as to anticipate moves to the upside when price lines cross above a key moving averages, or to exit trades when the price drops below the moving average. Regardless of how the moving average is used, they very often create automatic support and resistance levels. Most traders will experiment with different time periods in their moving averages so that they can find the one that works best for their specific task. So how do we use moving averages for our analysis? Moving averages lag current price action because they are based on past prices. The longer the time period for the moving averages, the greater is the lag. Those at 200-day moving average will have a much greater degree of lag than a 50-day moving average because it contains prices for the past 200 days. The length of the moving averages to use depends on the trading objectives, with shorter moving averages used to short-term trading and longer-term moving averages more suited for long-term investors. The 50-day and 200-day moving averages are widely followed by investors and traders, with breaks above and below these moving averages considered to be important trading signals. Moving averages also impart trading signals on their own or when two averages cross over. A rising moving average indicates that the security is on the uptrend, while a declining moving average indicates that there is a downtrend. Similarly, upward momentum is confirmed when a bullish crossover, which occurs when a short-term moving averages crosses above a longer-term moving averages. Downward momentum is confirmed with a bearish crossover, which occurs when a short-term moving averages crosses below a longer-term moving averages. I know, guys, that there are many words and it may be confusing right now, but let me just in several minutes we'll jump to the live chart and you would see those crossovers, those moving averages acting at support resistance in the live chart, particularly on Yury USD or gold. It would basically be very visible and you would understand why we had to spend those 15-20 minutes for this educational part. All right. So let me just show you these slides and briefly describe how we are using moving averages on the examples. So when moving average grows, you can open buy positions. In this slide, you can see it says bullish trend. We see that the longer term moving average, which is 200 moving average, stays at the bottom. The red one, it's a 50 moving average. It stays in the middle and the price stays on top. This is a classical indication of the bullish trend. And basically by looking at the moving averages order, you can clearly see that the trend is bullish. Same applies for the bearish trend. When moving average falls, it should be the opposite. So the higher period moving average stays on top, the lower period moving average in the middle, and the price is at the bottom. Clear indication of the bearish trend. So when moving averages go smoothly and only a little hesitates, it's peaks of a market without trend. Like on this chart, you can see that the clear indication of no trend, and the moving averages intercept constantly, the price intercepts with the moving averages, and this is a no trend situation. So yeah, like I said, basically, if the moving averages is growing, it's a bullish trend. If it's falling, it's a bearish trend. And one more indication is a lines interception. Depending on the interception of lines, we can judge that there is a change of trend. In here, there is a clear indication of the bullish trend, a 200 moving average at the bottom, lower period moving averages in the middle, and the price at the top. Then the lines intercepted, and basically trend changed. It became a bearish trend with the 200 moving average acting as resistance right now. So you see it acted as support in here, but from the line interception moment, it acted as a resistance. All right. So far, so good. We have finished the educational part of this webinar, and I would like you to invite to our MetaTrader to take a look at the current market conditions and to do the live market analysis. Let me open my MetaTrader trading terminal. Just 1 second. I'm gonna put my MetaTrader terminal right here. Okay, let me check that you see my screen. Okay, yeah, you should see it. All right. Perfect. Perfect. Let me see some feedback. Yes, perfect. You see my MetaTrader terminal. There are some Forex pairs on the left side, and we're gonna take a look at each of them and basically analyze it. And after that, if you have any questions or you have some suggestions, which currency pairs should we analyze, then it's basically easy for you to type your questions in the question section, or type a currency pair or a stock pair or a commodity pair so that we could analyze it. All right. So let's start with Euro USD. As I said to you, we can, this is an hourly chart. Let me maybe to zoom in. In here, we had a bullish trend, right? And the lower period moving average stay at the bottom. This is a 200 moving average. The 50 moving average stayed in the middle, and the price on top. This is a clear indication of the bearish, bullish trend, pardon me. Then the price reached resistance levels in here. And what happened is basically the price broke below the 200 moving average, and the lines intercepted. Since this moment, the trend changed. It became a bearish trend with the moving averages acting as dynamic resistance. Like in here, after it broke, after lines intercepted, we saw that the trend is bearish. And what happened is basically the pair acted as the moving average acted as a resistance in this moment. After it was broken, the 200-day moving average acted as a dynamic resistance in this moment, and then we see that basically these moving averages is acting as a dynamic resistance currently. We see that even the round figure level, like 1.10, is not actually acting as a dynamic resistance or support, but instead, like in this moment, 1.10 level was broken above and then broken below, but the pair found support in the form of 250 moving average in this moment and in this moment also. It's just like in several pips, but it's okay. So basically, if you simply apply those two moving average, the 200 moving average, this is a period, the simple one, the method is simple, and 50 moving average on the chart, it would basically ease your view on the chart. You simply view on the order of the moving averages, and you can clearly see that the trend is either bullish or bearish. Because we see that the trend is bearish for Euro USD, I would not suggest you to buy the pair right now. Basically what we have in 40 minutes is going to be a non-farm payrolls, which is a very substantial fundamental statistics, and the unemployment rate would be released, and usually those statistics impact the Euro USD or any dollar related pairs significantly. So if the statistics is much better than we expect, we could see the continuation of the bearish trend. Right? If you see that the statistics is perfectly fine, so I believe that the Euro USD would continue its bearish trend. And what can I see from the 4-hour or daily time frame? That the next substantial resistance levels, it falls on this 1.0830. Like you see, it acted as support here, probably in here. We saw that it touched this level in here. So basically, if the non-farm payrolls are better than expected, it would obviously give power for dollar, and we can see the continuation of the bearish trend, I believe, to the level of 1.0830. Instead, if the statistics is not as good as was forecasted, what we can see is that a correction to the level of 1.10. This level falls on the 200 moving averages, which in combination with the round level and the moving average makes it very, very reasonable and strong resistance levels in the current option. So we wait for those fundamental data, and if it's worse than expected, we can expect the pair to go to 1.10 level. If it's better than expected, we can see the continuation of the bearish trend. There is one well-known proverb: trend is your friend. So I would not advise you to trade against trend until you're very, very confident that the price would correct itself. Like in here, if the price goes to the level of 1.0830, basically we can open a buy position with a very tight stop loss. Let's say we put a tight 30 pips stop loss below the round 1.08 level, and then we buy it somewhere here. So it's a good opportunity. But right now, at the current price moment, I would not advise you to either sell or buy, because it's not yet a good technical picture to buy or sell currently, or to put pending order. All right, regarding the pending orders, I would say that there are two opportunities. I would obviously put a sell stop as sell limit order from the level of 1.10 with 30 pips stop loss. Let me draw it. Let me make a horizontal line and we make it just a red one. Okay, and let me make it small. So a sell limit order on the level of 1.10 with tight 30 pips stop loss right here, and a take profit on the level of 1.0830. Instead, I would put a buy limit order on the level of 1.0830 with 30 pips stop loss. I would put it somewhere here, the stop loss, and the take profit around 1.10. Maybe not precisely on 1.10, but more you see how moving average is changing. So if it goes below this level, I would basically adjust the stop loss. So those two order would give us nice profit loss correlation ratio of maybe 1 to 5. And basically from the technical point, from the technical analysis perspective, it makes sense. All right, then we move to gold. Let me just zoom out a bit. In here, you see that from the beginning of July, gold was staying in the bullish channel, right? The blue one. But when it broke the channel, the trend basically changed. There is maybe too many lines for you, but I'll try to explain. We saw that in the beginning of July, that was a bullish trend. There is a clear indication. The longer period moving average at the bottom, in the middle moving average with faster period, and the price is on top. Bullish trend, we see the bullish channel, how it acted as a barrier for this pair. But once the channel was broken in here, the lines intercept and the trend changed. It became a bearish trend. And what the pair did, it started to form a bearish channel right here, the red one. And right now, currently, it stays in this bearish channel. So the previous information which I told you about the Euro-USD currency pair, it's also can be applied for the gold, because we are expecting non-farm payrolls to be released in like 35 minutes. And if the data is better than expected, which is positive for dollar, we can expect the gold to continue its bearish trend at least until the 1920 level, which would be the lower boundary of the channel. So if the data is better than expected, we can expect the pair to fall right here, at least for 1920. Let me draw a line here. All right. Right here. So, but in case that the data is better than worse than expected, we can expect the pair to correct to the upper channel boundary right here. Maybe not exactly on this boundary, but on the level of 1950, which is a round figure. So once again, we wait until they release these non-farm payrolls, the unemployment rate, and all other statistics. And we see either the pair goes right here or right there. Once again, what I would suggest is to wait for this data, and you either buy it from the lower channel boundary, somewhere from the level of 1920, buy limit order with tight stop loss and the take profit around 1950, or you put a sell limit order on the level close to 1950, the level which would also be somewhere near 200 moving average and somewhere near the channel upper boundary, which in combination with the round level, the moving average, and the channel boundary makes a great resistance levels, which very hardly be broken. So you put a sell limit order from this area with all the way to 1920. All right. Okay. Then let's go to British pound dollar. The British pound dollar is clearly can be seen as the bearish trend. We see the very same order of lines of the moving averages. The price is at the bottom, the longer period moving average on the top, and in the middle, the 50-day moving average. Clear indication of the bearish trend. Right now, the pair stays in the middle of the channel, which is also not a very good moment to buy or sell right now. So we either wait. If the pair goes to the lower channel boundary, then we can consider buying. And if it goes to the upper channel boundary, we can consider selling. But once again, I'd like to remind you that the trend is your friend. It may be not the best idea to buy when there is a downtrend. It's, sometimes doesn't work out. Like in this particular situation, you see that it formed channel. I draw it when the price was here. So it came to the channel boundary. So we could buy it here, right? But it didn't actually go that much up. So it went 50 pips up and then it came down as well. So I was expecting it to jump to the channel upper boundary to the level of 1.28, but it didn't. Instead, it went down. And in this particular case, it even broke the lower boundary of the channel. But when you sell from top, right, when you're following the trend and you see that the price actually came to the channel upper boundary, if it confirmed with some indicators in here and it confirmed with the moving averages, is a perfect opportunity to enter a trade with a trend on your side. So you can simply put a sell limit order right here or sell from the market if you are online and you see this situation and go all the way down in here. So once again, yeah, we wait. If the price goes up to this upper boundary, then it's good to sell it from there. But right now, we see the clear indication of the bearish trend. All right, the next pair we have on list is USD CHF, which is dollar Swiss franc. Basically, what we see here on an hourly time frame, there was a bearish trend, a good sustainable bearish trend, but then the price found a resistance in the form of 0.8550 level. You see it stayed for some time near this level. Several times, you may say 4 times, it didn't actually reach this level in here, but almost touched it. So it found this resistance level, and when it retraced from the level, the lines intercepted, and we kind of saw a bearish trend. It's not really a very nice bullish trend, but I would say more like to me it occurs like a channel, a range between those two levels. And if price goes to these round 0.90 level, I would definitely sell it from here. You see that this level acted as a perfect resistance in the past, in here, in here, in here, in here. So if it goes to this particular 0.9 level, I would definitely sell it from here with tight stop loss. And obviously, if it falls to the level of 0.8550, I would definitely buy it with a tight stop loss. So if you want me put these red lines of stop losses, I would suggest that we do Let me do a red one in here. There, 30 pips is enough. So you put a sell limit order on the level of 0.90 and the stop loss of 0.9030, and we take profit all the way here. So it would give us an amazing profit loss ratio of maybe 1 to 10 or something like that. So, and in here, I would put a buy limit order from the level of 0.8550 and the stop loss, let's say, around 85.20. Okay, 85.20, something like that. So we put a buy limit order from here with tight stop loss. I would not suggest you to buy or sell right now. You may consider buying and not sell. Obviously, not, there are no sell opportunities currently in this currency pair. But if price jumps to the moving average, we can consider buying. Still, it's kind of a bullish trend, not really sustainable, but a bullish trend. And if price jumps to this moving average, which currently stays on the value of 0.87, we can consider buying it from these moving averages with a final target of 0.9. All right, the next currency pair is USD Japanese yen. Let me just scroll a little bit for you to see a bigger picture. Maybe we even turn to H4. All right. So what we see here is that it was a very nice, sustainable 2 months bullish trend for this currency pair. So the dollar was rising, and it almost touched the 145 level. The 145 level acted as a resistance, and since that level, the correction started. It came all the way down to 137, and then also is trading kind of a sideways. If we put a 1 hour time frame, we make a bigger picture, we see that currently the lines are intercepting. So they intercept here, they intercept here. And we see that currently the price faces a resistance in the form of 144 level. So what I would suggest is to wait until the pair goes to this level and maybe try to sell it from here, also with tight stop loss. But if we say that there are more like buying opportunities, so definitely suggest you to wait the correction to come to this dynamic moving average of 200 moving average, and then jump all the way up to 144 level. So we wait until it goes to 141.70, something like that. So it's dynamic, so it can change. So we put our order somewhere here. Yeah, if the price goes to this level, we can buy it all the way here. Or obviously, if it breaks this level, then the next buying opportunity would be on the round level of 140. If you're looking for sell opportunities, those can be found on the level of 144. All right, the next pair is Euro Japanese yen. It's a 4-hour time frame. Basically what we see here is a range. There is no trend. You see how the moving averages intercept, but it's a very good range. So the lower level of the range is 151, and the upper range of these upper boundary of the range is 158. So the pair is trading in this range from like, let me just put maybe 1 hour and make it a little bit zoom in. Okay, like that. So you see the range started from here, it went to this boundary, found resistance in here, we went all the way down, almost touched this level in here, and went all the way up. Once again, I would not suggest you to trade in the middle of the range, but instead you put a sell limit order on the level of 158 in here, and a buy limit order on the level of 151 right here. So we put a sell limit order here with it all the way down to here, and a buy limit order in here with a tight stop loss. Once again, I use tight stop loss around 30 pips. That would be enough. You know, if it's gonna break this level, it's gonna break it substantially, and it's gonna go all the way up. If it breaks this level, it also breaks it substantially. It goes all the way down. So 30 pips is enough in this particular case, just for some, you know, like in here, you see it broke this level, but the high of this candle was 158.03. So there was a 3 pips fake breakout, but it's normal on Forex market. So that is why don't use very tight stops like 5 pips or 7 pips some people use. I don't do that because on Forex market it's not as precise as on stocks, and those round levels can easily be broken 10-15 pips, and then the price reverses. All right. The next pair is US dollar, Canadian dollar. What we see here is a bullish trend. Before last week, it was staying in the bullish channel right here, maybe not a very precise channel. It was broken in here, but the trend and the price returned in this channel. And this week, like 2 days ago, the channel was broken upside, and we see that the pair is very, very bullish. Like in expectation for non-farm payrolls, like in the last 10 hours, it's going up crazy. And that is kind of a suggestion that the pair is in uptrend. If we scroll it a little bit, we see that the next substantial round level resistance is on the level of 1.34. So what I would suggest in this particular situation is you don't buy it right now, but you buy it when it breaks above the 1.34 level. So what I would do in this particular situation, I would put a buy stop order above 1.34. I would suggest like 25 pips, something like that. So we put a buy stop order on the level of 134.25, and with all the way to the level of 135. Let me draw it also. All right. And make it black like that. So we put a buy stop order on the level of 134.25 with final take profit on the level of 135, and a very tight stop loss just below the level of 134, which would be 133.95, something like that. Yeah, you can adjust these parameters. Oh, just let me zoom in here. Okay, and make it, yeah, like here. So we put a buy limit order in here, expect the pair to go all the way up, but in case it reverses, we have a stop loss of 133.95. This is my suggestion for this currency pair. I don't see any selling opportunities right here, right now. Obviously, you could put a sell limit order, but I would not suggest doing that because we see that the trend is very strong. There is a bullish trend, obviously, and the moving average is acting as a dynamic resistance support, pardon me. So I would not suggest selling here. All right, the next currency pair is Australian dollar and US dollar. In here, there is a bearish trend, obviously. Now we see that basically it was in the bearish channel for some time. Right now, it stays below both moving averages. We see a longer period moving average on top. The shorter period moving average is just below it, and the price is at the bottom. Currently, the price is trying to breach above the a shorter moving average. So once again, if we see that the non-farm payrolls are better than expected, that would send Australian dollar lower. And in case the data is worse than expected, we can expect it to appreciate. And the next level where it should appreciate is basically these a longer period moving average, which falls somewhere on the level of 0.6650, somewhere here. So once again, in this particular situation, I would suggest you to wait for the data and then see how the situation evolves. I know that many of you, especially the new traders, they want to trade right now. Like, why should I sit? I need to trade, I need to buy, I need to sell, I need to do something in order to make money. But if you want to trade sustainably, you should wait for an appropriate moment to enter a position rather than buy or sell from the market at any particular given day or moment in hope to make money. The trading should be sustainable, and finding a good entry point is one of the key factors to become a successful Forex trader. So in this particular pair, this is your Australian dollar, we see that the pair was staying in range for some substantial amount of time. Let me see, for since the end of June, it was staying in the range. There were plenty of opportunities to buy and sell inside the range, especially when the range is such, flat one. It's not a channel with some angle, but instead it's flat. So what you basically do if you decide to trade in the range, you buy from the lower channel, this range boundary, you put your take profit on the opposite side. So we could bought it here, tight stop loss, like 30 pips would, why exactly, why do I say 30 pips? Like in here, we could have bought it right here. A 30 pips stop loss would be 20 level. You see, this is a 30 pips. In here, it kind of broke this range and went like 21, 22 pips. If we had like 20 pips stop loss, it would trigger the stop loss and we would result in loss. But after that, you see that it went to the opposite side of the boundary. And this 30 pips stop loss would give us an opportunity to wait and to to hold our position until it became profitable. So once it reaches the upper channel boundary, range boundary, we sell it from here. It goes all the way down, almost touched it here, and in here we could have sold it right here, but it broke the channel and went all the way up. So currently this pair stays in the bullish channel. Yeah, if it breaks this level of 1.876 168, it can go all the way up. If it returns in the range, we can see some selling opportunities, but before it breaks the dynamic moving average in the form of dynamic support in the form of 200 moving average, I would not advise you to sell. So currently I don't see any sell opportunities, but buy opportunities arise once it breaks 168 level. Let me also draw it for you. Okay. All right, so if it breaks this level, we can expect a bullish momentum further. The next pair is Australian Canadian dollars. So what we see here is the bearish channel. Obviously, the pair is in the bearish channel. The trend is bearish, but currently the price is basically correcting itself inside the channel boundaries. Like I said before, we can expect the pair to go to the upper channel boundary right here and then sell it from there. That would be a very nice opportunity because in here, first of all, we have upper channel boundary. This is kind of a good sustainable support resistance, I'm sorry, and the level dynamic resistance in the form of 200 moving averages is additional resistance, which would hold the pair inside and give us opportunity to trade with stop loss and good take profit on the opposite side of the channel. So no buying opportunities right here. At the moment, selling opportunities arise when it reaches the upper channel boundary in here. All right, then let me log into my trade account, another one. And we're gonna go for the indexes. The first index which we're going to analyze would be Standard & Poor's 500. In here, in this trading terminal of Forex4you, it's called US 500, but it's a S&P 500, as many of you may know it. Basically, the index right now is in a clear bullish trend. It's in the bullish channel, these blue lines. Yeah, right now it's kind of in a correction mode. So it touched the upper channel boundary in here. It almost, touching the lower channel boundary, which I expect it would do in the nearest future. And currently it stays on the round level of 4,500. So the good strategy is to buy from the lower channel boundary right here and expect the pair to go all the way up inside the channel with tight stop loss. So once again, put your buy limit orders on the lower channel boundary when it touches it here, and with your take profit all the way up. Basically, it can be bought from the market right now, but you would need to put your take profit below the lower channel boundary, which would result in large enough stop loss. So it's possible to buy now, but I would suggest you to wait until it touches the lower channel boundary. And if the boundary is broken, then a correction starts and we can expect the index to fall. Let me see the situation. Like in here, I said you that if the lower channel boundary is broken, then we can expect a momentum, a bearish momentum. These happened with this US 100 index. This is NASDAQ 100. So we see that it was in a very nice bullish trend starting from the beginning of May. And there is a very nice bullish trend which brought a lot of pips for us. But it looks like this channel was broken recently, and once it was broken, you see that the bearish momentum occurred. So right now it faces support in the form of 15,300 level, And if it breaks it, we can expect the bearish, continuance, the bearish momentum in here. And basically, I'm also looking for some sell opportunities, at least until the price jumps above this dynamic moving average, 200 moving average. All right. Hope that was clear. If you have any suggestions for any other currency pair or some, commodity pairs, feel free to share it in the chart section. Once you're typing, let me just show you another slide, which we have. The slide was called how to open an account with Forex4you. That wouldn't take us long because opening with an account with Forex4you is very, very easy. I hope you should see, let me check it, my screen, right? Okay. The screen with Forex4you website. Okay, yeah, good. There is a Forex4you website. What we see here is a login and open account button. We simply put an open account button and it opens the registration page. We choose a country. Let's choose Nigeria. But if you're living in another country, it's okay to choose your own country. So we have a Nigeria. Input our phone number. Yeah. Like that. Guys, this is a random phone number. It's not my personal number. Don't try to call, to send an SMS. That's just a random number, which I use for demonstration purposes. So we type in password. Okay. So it should be minimum of 5 characters, English letters and numbers, our name. We would need an email. Okay, I have prepared my email already. It's opened. Yeah, I'm just typing it in here. And the country of residence. Let's also choose Nigeria. Basically, that's the all information you need in order to open the account. You simply click confirm and continue, and you wait for the SMS with the verification code. If for some reason you don't receive a verification code or in the SMS, you can simply ask them to send it to your email. Like in here, I see my email opened. And let me just wait for the code to come. Yeah, there it is. There is my code. I simply copy this code. I paste it right here. And I click confirm and continue. So what it does, it's simply creating me an account right now, and boom, I'm good to go. I have my Forex4you live account. It opened me a Classic Pro account right here. Basically, they would send you the credentials for the account in here. They said the email says registration is complete, the MetaTrader 4, there is a login, there is a password, there is a server name, and all the details which you need to log into your MetaTrader and basically start trading. Obviously, the balance is 0. I don't have any money yet, but what you need to do is deposit. You click on deposit button, you choose your payment system, the amount of money you want to deposit in here. And also you need to verify your profile. It says profile is not verified. Please verify your profile. You click on the link, you follow the instructions which they give you, and you verify your profile. You deposit some funds, and you're ready to go to start trading. But basically, opening an account with Forex4you is very, very easy. What you need is your email and your phone number. That's it. And for verification, obviously, you need to provide some information for Forex4you. All right, that was the part with the opening an account. Let me see if we have any questions right now. All right. Okay. Okay, right. Guys, feel free to type your questions in the question section, and I'll be happy to answer those. Okay, allowed to talk. Some of you are raising hands asking to speak, but it's not how we do that. We don't really give people voice, like, because for it's not like we do on the webinars. It's not a live session or not a round table. So if you have any questions, please type your questions in the question section. I would read it and obviously answer it. But please don't ask us to give you an opportunity to speak. All right. So the first question was, okay, let me see. All right. Yeah, once again, some of you are raising hands. Please, if you have questions, type your question in the chat section. I'm not going to give you an opportunity to speak. Yeah, just your questions. All right, we received one. Let me see. All right, the question is, you did not talk much about buy stop or sell stop. Is it a strategy to use entering trades? Basically, there are 4 types of orders: buy limit, stop limit, buy stop, sell stop. And we can use any of those in this particular strategy. Like, let me show you on an example. The example is the following. Let me just open a EURUSD. So let's say that the pair is going to the level of 1.10. If you are deciding that you're going to sell it from 1.10 level, you can easily put a sell limit order on 1.10. If it reaches this level, the sell order opens, and with an expectation to go on the different, on the go lower. But you put your stop loss slightly above this level. But if you expect this level to be broken above, right? So you put a buy limit, a buy stop order above this level. Let's say you expect this level to be broken, and you want to trade after this level is broken, after the price breaks the more dynamic moving average, after the price breaks this 1.10 level, and you open, you put a buy stop order above the level of 1.10, let's say 1.24 or 110.25. We make it red, okay, in here. And you go all the way up with this order. So once it's broken, you go all the way up. You put a 30 cents stop loss below this level in here. So that's just different types of orders. My strategy, I use both types of orders in here. So another question is, I'm new to start and I have only, oh, you see that they released the data, and right now it's going to be a volatile market right now. Oh, whoa, you see, let me just put it right here. You see the volatility starts. All right, I'm new to start and I have only 100 Naira in my account. So can I trade with Forex4you with this amount of money? Yes, basically you can do that. You can deposit as much money as you want, and you can start trading with the money even if you don't have a lot. Oh, you see that probably it would touch this 1.10 level right now, and the new selling opportunities would arise. I would definitely put a sell limit order on this level if it reaches this level. It's not really sure, but let's see. Yeah, so as much money as you have, you can basically deposit. There is some minimum of like $10, I believe, which you can deposit with Forex4you. But obviously, trading with, if you are a new trader, it's better to start with the demo account. So practice on demo first, and once you have a sustainable result on demo, then you can jump to live account. So that would be my advice. Don't trade on real money until you know that you can sustainably make profit. So practice on demo, it's free. Forex4you have free demo accounts. Yeah, like manage accounts. I believe you can do add demo in here, add demo account, and they would send you demo MT4 or MT5 if you need. You choose a leverage, you choose a currency, you click create, and boom, you have a working demo account free of charge. Even no need to pass the verification. The account is created, you can use it, you can practice, and once you have sustainable result on demo account, then you can jump on live. All right. Okay, do we have any other questions? I see many people say thank you, thank you. Should I sell Yury now? No, not currently. If it goes to 1.10 level, then it's probably good to sell 1.10, 1.1005, somewhere right here. So it have a really round figure resistance, and the resistance in form of 200 moving average. The same would be applied to gold. You see the gold is also going up. The British pound is also going up. It can be sold from the upper channel boundary. Yeah. So yeah, not yet, let's say, but selling opportunities may arise. All right, a lot of guys saying thank you, thank you. Okay, then I'll tell you thank you as well. Thanks for visiting this webinar. Now let me just open my thank you slide. Oh, sorry about that. Let me open that. Okay, yeah. That's it. Thanks very much for being with us. I really hope that this webinar was beneficial for you, that you've learned something, and that you're going to use this information for your future profits. Thanks very much. Have a good trading. Have a profitable Friday, and good luck in trading ahead. Thank you very much. It was Yury Safronau and Forex4you live trading analysis webinar. Thank you very much, and bye-bye.
Join Forex4you, an award-winning trading platform that you can count on. Trusted by traders for over a decade.